Morning everyone. Thank you for joining us. My name is Shivadeep. I am founder director at Happy Finishing School and Consultancy. Thank you for taking time out on Sunday and coming and joining us for this presentation. What I'll do is I'll make it quick and short. What we study today is I'll take you through the FATP program. What is an FATP program, along with what is financial modeling. And in the program, I'll take you through the various aspects of the program, how this program is beneficial, what we do, who we are. So let's start with knowing ourselves. I'll just introduce ourselves in a very quick fashion. So we are as you must be knowing by now, Ankita must have told you, we are a finishing school in finance. Now, the word finishing school in finance is a quite new concept when it comes to finance industry. The finishing school we have for, if you look at doctorate side, people do their MBBS and go for their specialization, though that's a long thing. That's a kind of a thing which we are going to do up here. People finish up their engineering, then specialize into a particular domain. What we do up here is basically converting whatever you have learned over a period of time in theory. I will try and convert them into a practical. How do you practically implement the concepts that you learned during MBA Finance, your BComs, or doing your CA or your CFA? Something like that. So the programs that we have runs from in a variety of degrees. We run a program which is known as a financial analyst training program. Then we have a certificate preparation. We take classes for L1, CFA L1 and L2, FRM 1, 2 and NCFO models. On analytical side, we have SAS based, MATLAB, SPSS coming soon. We will be starting with R as well. So R as in statistical package. Skill-based training, we work on equity evaluation, debt research, financial modeling, basic and advanced Excel, derivatives, technical, and VBA and macros for Excel. The point of presentation that we have today is understanding the financial analyst training program and the financial modeling program. So let's start with the understanding of these programs. So FATP, what does this word FATP stand for? This is Financial Analyst Training Program. So what do a financial analyst do? So when we understand what a financial analyst do, we'll understand the things that we are going to study in the entire program. A financial analyst typically works on finances of the company, understand the finances, helps management in making decisions, understanding the ratios, the capital budgeting decisions. He's a guy who is helping out the management or the shareholders or equity holders in understanding their company and the future prices of this. So what we do is we here start FATP with Excel as our analytical tool, Microsoft Excel. In Microsoft Excel, we'll start with basic and advanced Excel. Please remember that in the entire program, we would be taking this program in a way that we talk about the theoretical concept from ground zero, and then we build up in the entire thing into Excel or any other thing. So it's like starting with basic Excel, and then we'll move to advanced Excel, where we would cover up lookups, loops, nested ifs. We'll talk about pivots. We'll talk about here we'll look up, edge lookup, and index match. So how is this different from whatever you have on web or whatever you have gone to other classes? Now in Excel, what we do is we work on a very practical implementation of the entire thing. We'll give you scenarios and a real life data to work upon, and we'll talk about the scenarios which happen while you're working in Excel in real life. So instead of a textbook kind of reading, it would be a very dynamic reading where I would be giving you scenarios and you would be working on this. Supposing this happens, then what will happen? It's just not a mere understanding of a VLOOKUP or say different nested functions. Say if I have to find a maximum number, say there's a bank data. If a bank is giving an interest, I want to find which is the 15th number, a customer who's been given the maximum interest and what is the name and so on and so forth. So we'll be clubbing different functions together, and you will be getting data of around 1 lakh data points to understand and work on it. Once we finish up our basic and advanced Excel, we'll talk about macros, but in the initial I'll talk about only about the recording of the macros, because this is basically understanding. I want you to understand Excel for about a month and then move into our VBA coding. Now the second model that we'll talk about is corporate finance. What we'll do in corporate finances, we'll talk about capital budgeting methods like NPV, IRR, MIRR, along with time value of money, TV and TVM and its applications. Now in TVM and its application, what we'll do is we'll see all Excel-based application. How do we use these functions in Excel? PV, NPV, and IRR, MIRR. These are inbuilt functions in Excel, and we need to understand how to utilize these functions, PMT for that matter. So we'll be trying and making you used to those functions, because in practical life, Excel is normally the preferred tool for making any analysis in most of the companies. So we'll be giving you the insight into how to use Excel in doing all these functions. Then we talk about cost of capital here, WACC, and all this we'll try and find out in Excel. We'll take a company as an example, see their financials, pick up their equity and debt thing, and then we'll be making it into Excel and coding it the entire thing into Excel. Then we'll see application of TVM. In application of TVM, we'll talk about bond analysis. We'll finish a bond here and then we will move into equity. While doing the bond analysis, we'll also talk about Indian bond market, how it functions and things, and then we'll talk about bond markets abroad. So once we have finished with the corporate finance module, we'll be moving into EIC module. This module is common for financial modeling as well as for FATP. That's a common module that you have in both the cases. Now, what is the need of studying the EIC framework? There are two approaches to valuation. One is a top-down, and second one is bottom-up. Top-down is EIC, where we start with a bigger and macro variable, then we start moving down. It's like a funnel like this. From a big, we'll try and figure out what is there at the bottom. Bottom up is just opposite of it. We'll start with a small thing and then we'll bottom out. This analysis is done by people who are there in the industry for 10-15 years, because from a micro taking into a macro requires a big knowledge and experience in doing this. So studying this is necessary because the price of a stock is normally dependent on information. Now, information can be in any form, in any shape. It could be information for economy, information for industry, information for company. Now, to analyze that information and to make use of that information, I need to understand how that information changes a particular sector or a variable. For example, let's take an example. Say interest rate and banking, where whenever you see a rate cut thing happening or there is an expectation of rate cut happening in the market, the banking is all moving up. If you see in the current few days, when globally the liquidity is increasing and the rate cut is happening, you can see Indian banking sector is also moving up. These are known as rate sensitive sectors. Then comes to, this is what we'll talk about economy. We'll talk about entire macroeconomy, and macroeconomy we'll be focusing on 3 important factors. In fact, 4 important factors. We'll talk about GDP or output growth, talk about unemployment, talk about inflation, and then we'll talk about at the end on business cycles. The focus here would be in the entire presentation would be on Indian economy, and references will be given for US. For example, starting and understanding GDP, I'll talk about US economy to understand into GDP, because that's a developed economy and gives you a better parameter to understand the entire facts and figures. Coming to information in industry, we'll do a complete industry analysis. Now, why do we need to understand news in the industry? Because news in any news that affects the entire industry will affect my stock as well. For example, if you remember that there was a hike in excise duty on gold. Now, when the excise duty on gold increased, the prices were falling because the people were not getting so much amount of they were not having that much amount of liquidity to buy gold from the market. The gold price were increasing. So you can see the gold companies took a hit at that particular moment of time. So this was the news which was affecting the entire gold industry, and this is about a year back. So what we'll do here is I'll talk about industry jargons, the industry specific ratios. Then we'll talk about water pipe force analysis. Then we'll talk about nth concentration, Huffendel index, and life cycle, cyclic, non-cyclic industries. So this is where what we'll do here is in the FATP program. I'll take one industry and make you understand the entire industry concept. You can pick up your own industry, any industry that you want, and then you will. I'll give you parameters to write a report, and you will write an entire report on the same. That is how this entire presentation will work. So you'll have people, you will have parameters to write this industry report, and based on these parameters, you will be submitting a report as an assignment. Then comes the company. In company, we'll read a company's annual statements. You will be writing a report, would be like a company profiler. And you will know, we'll try and understand the revenue drivers, the growth in different sectors. The growth will be then the part of basically ratio analysis. And see, we'll talk about the management and all other factors. Sorry. So this is how we'll understand, and these three is where your assignments will start. You'll have to pick up in phenomena and anything that you want to discuss upon, say US subprime prices or India role in WTO kind of thing. So you can pick up and give a economy presentation. Then you will pick up your own industry, write a report on this, and then you will write a report on the company. At the end of this, I'll show you how reports are written by old students. I'll show you those reports, and if required, we can send it as a demo to your end. Once the EIC model is done, we'll move to financial statement analysis. We'll discuss income statement, balance sheet, and cash flow in detail. So how we'll do that? We'll pick up the data. We'll pick up the data from the market, and then from that data, we'll build up our income statement, balance sheet, and cash flow. And here we'll understand all basics. We'll start with accounting basics. Just to give you an idea, how do we start? We'll basically dedicate a class to understand the basic. We'll talk about accounting concepts, conventions. This is the basic that we drill into. We'll talk about ledgers, accounting process, procedures, and we'll talk about the golden rule, so that you get a brush up of the entire thing. You would be provided notes on all of these parameters, and then we will start building this, and we'll build this together so that you also know how to build an income statement, balance sheet, and cash flow. So once this will be built up, we'll move into building up the industry, income statement, balance sheet, and cash flow. So we'll pick up the data for industry and build up industry, income statement, balance sheet, and cash flow. Why do we do this? We do this because the assumption while comparing, we'll compare our ratios of company with the industry. Now when we are making a comparison, the same figure, there should be uniformity in taking certain assumptions. For example, let's take an example of, say, a balance sheet item. Say, let's take a fixed deposit. Now, fixed deposit, there could be a company where the fixed deposits are, maturing within 1 year. So they all will be a part of current assets, and there is a given information, or you are making an assumption. Let's take, I am making an assumption. Now, if I make an assumption in my balance sheet, that current fixed deposit would be a part of current assets. Now, the same assumption should be run in the industry, so that the current the ratios, when I am comparing the liquidity ratios, should give the same kind of values, so that the comparison becomes easy. You can only compare apple with apple, apple with some or fizz. If you are comparing an apple with fizz, that's not a right comparison. So to make a comparison easy, we'll make our industry income statement, balance sheet, and cash flow. Here we'll be doing it in a little different way. While calculating the industry, most of the time in most of the places, what happens is they take 4-5 companies and do a comparison. We'll make a model in such a way that we can take n number of companies, whatever the peer group of that particular company is, you can make them a part of industry, and it will be a very automated thing. You just have to keep adding, copying and pasting, and the income statement, balance sheet and cash flow will automatically reflect the entire thing. I'll show you while in the model. Once we build up this, we'll build up the common size for industry and common size for company. Why do we do that? Then we'll make a comparison between the industry and the company. For example, employee cost. How is the employee cost in the industry and how is the employee cost in company? And we'll make dynamic model for the same, wherein you just have to change the parameters and graph will be formed automatically. Say for example, direct cost or cost of goods sold. How is cost of goods sold in relation to industry as well as in the company? So that is where we'll make the common size. We'll do a company analysis and company industry analysis. Then once this is done, we'll move into ratio analysis. We'll build all the ratios, including the DuPont analysis and Altman Z-score. So we'll build the ratios, and I'll explain you how to build up those ratios, and we'll go in detail. We'll talk about the theory of a ratio. For example, we are talking about current asset. I'll tell you what current asset is, what is included in the current asset, quick ratio or something like that. Any of the ratios we'll pick up. And those ratios, while building up those ratios, we'll keep in mind that the theory of the ratio is understood, and that ratio, then this ratio is built into Excel. So I'll give you notes on those ratios so that you understand those ratios. Ratio analysis, I suppose, is one of the most difficult thing to remember. There's so many ratios. So we'll try and put logics to ratios. So what is the logic behind picking up a ratio? So when you understand the logic, understanding the entire ratio analysis becomes very easy. Once these things are built, we will be into financial modeling. We'll pick up, we'll project the income statement, we'll project balance sheet, we'll project cash flow, we'll calculate beta, we'll calculate WACC in model, which what we have learned in corporate finance. You build beta in Excel, we'll find KE for this WACC and all those things. So they will be picking up data from the market, and then we'll be building the entire thing. So this is something that you will be building entirely in the model. Will not be picking up from anywhere else, any assumption from the market. You will be making your own assumptions and building on the entire model in Excel. After doing this, we will be then moving into, we'll select our projection parameters, we'll make our assumptions in an assumption sheet. And the model will give you, the entire modeling is made in such a way that you have control in each and every item of income statement, balance sheet and cash flow, and you can change them as and when required, and the valuation will tell you how the change is reflected on the future price of the security. Then we'll move into our valuation, and we will be learning valuation from different methods, from a dividend discount model to DCF, where we'll talk about FCFF and FCFE. We'll talk about relative valuation. We'll have around 7 ratios here. Then we'll talk about EVA, economic value added. And in this projecting income statement, we'll also see how EIC is implemented in Excel, which is nothing but regression. We'll do a regression analysis. We'll talk about here, there are 7 ratios. So, and this model will be in such a way that the price that you are arriving, you can actually give your fundamental call based on these ratios. And we can compare your ratios with whatever your valuation targets with whatever target that is running in the market. There are different sides where brokers give their targets, so you can match your targets with the broker targets. If they are saying a buy, I should also, out of 10, 9 are saying buy, I should be somewhere there. I understand the price will not be meeting. In valuation, what we'll try and do is we'll try to find the intrinsic value. Now, question is, what is intrinsic value? Say for example, this is a shopkeeper and this is me, and I want to buy say 1 kg dal. I'm just taking an arbitrary example. Ask him how much is this dal for? He says 100 rupees per kg. I said this is costly. I am getting it at around 98 rupees per kg. This 98 is the intrinsic value as per me. This 100 kg is intrinsic value as per this guy. And I agree to buy this at 99 rupees. So this 99 is the price, and please remember, price is an outcome of buying and selling. Where buyer expectation meets the seller expectation, price is arrived. So we are not here to, in the modeling, we will not try and find out the price. We will try and find out the intrinsic value based on the financials of a company. Right? Please remember, in the entire thing, never say that we are trying to find out the price of our security. We are trying to find out the intrinsic value of the security based on the financials that we have picked up and made the model on. Here we have 5-year-old financials. So based on last 5-year financials, I am making this model. At the end of this, I'll show you. Please stay with us. When I end the presentation in next 10 minutes, I'll show you how we build up the model and the entire thing. So once we finish up the financial modeling, we'll move into derivatives. We'll talk about all forward, future, all kinds of derivatives, including, so we'll talk about forwards, futures, options, swaps, and exotics. So we'll study all this in detail from ground zero. So you need not to have a very good prior knowledge on any of the topics that I have discussed, because we will start from zero and then we'll start building upon this. Once we finish up the derivatives, we'll move into technical analysis, and I'll give you an introduction on technical analysis there. So this will be intro to technical, and we'll talk about the charts and graphs and the basics of technical. In between, we'll be taking your maths classes, basics. I'll take you through. So this is how the entire course is scheduled. So what I'll do is I'll take you through how a day runs up with for a FATP student. For a FATP student, day normally starts at 9:30 in the morning with a newspaper session. This is where everyone has to read news from a newspaper. We follow business line. So they pick up a news from the newspaper and they give their own. First, in the beginning, people read it out so that they prepare for the just a minute round. And then over a period of time, they'll are asked not to read from the paper but give their own recommendation or their own understanding and make people understand. That helps you out in facing the crowd and improve your English communication as well. This typically lasts for an hour. 10:30 we start up of a regular class, which runs to about 12:30. We have a 15-20 minutes break, and then we again have a 45-minute session. Break up for lunch between 1 to 2, and 2 to 4 is the time when these guys have lab, because this is more of a practical session where you have to read and then apply that on practical. So we have a dedicated lab with us. If you are carrying a laptop, that's well and good. We'll give you a Wi-Fi passport and you can utilize the same. And if you are not, then we have a dedicated lab up here. You can pick up a system and work there. There are lots of reports that you have to submit during the program. In between, then we'll have mathematics, as we have already told you. Then we'll talk about reasoning. There would be guys taking your reasoning classes. And then we'll have one-liners. We'll talk about how to give answers which are normally close-ended, because questions come from the answers. When we are sitting in an interview, we give a open-ended answer so that then more questions arrive from the same answer. So that is where we try and discuss one-liners, and this will be class discussion where we'll be talking about how to give a proper answer. We understand the concept, but when it comes to giving a proper answer, the line gets missing at times. So we'll write those one-liners. Then every week, Monday, you have a test which is of 50 questions. Test your knowledge on whatever you have learned over a period of time. And there we'll talk about financial markets, which is a module I forgot to mention. We'll talk about in-depth Indian financial markets and global financial markets. There are regulators like in US, you have SEC and FSA. So we'll talk about the regulators, the role of central banks and all those things. This is basically what happens with a class. And we'll have more of essay writing things. This is a basic preparation along with the CV writing and CV posting. So along with this, we'll be talking, and on daily basis it will be an interactive session. The entire FATP is a question mark. When I say question mark, that means you have a right to ask why this is happening. Do not hesitate to ask why CAPM is built like this and where we'll get the data. Because if you hesitate now, it will be difficult for you to understand. So I'll try and give you as many answers as possible, and we'll work on the entire thing. And the class normally is a dialogue. We are more like a family, and we learn a dialogue in there. So it's not a monologue where I come and start giving and you just take on the lectures. We'll try and have a dialogue working in. Now coming to FATP online, the guys who are going for FATP online, they would have their classes on Saturdays and Sundays normally, or if and when required, we can work on the previous days as well. They will get recordings, the class recordings, exact class recordings that we are doing in the class, and they will get recordings beforehand. Before the class, say there's a class on Saturday scheduled for say Excel, they will be given these videos beforehand. So the entire week they can go for the videos, and then when we sit together, we can talk about creative terms. And I'll take you to the entire thing once again. And for the doubt clearing sessions, there is a one more class which runs on the weekdays. But most of the working, I find it difficult to attend them on weekdays, and Saturdays and Sundays is normally time when people are coming for this. Now, assignments and everything will be given as per the schedule running in the regular FATP batch, and you have to submit the assignments. For your doubt clearing session or over phone, you can do it anytime. But then since I take normally classes, you can call up Ankita or her associates and just take a time, and at the particular time I'll give you a call and we'll solve it up. Or you can meet me on a platform like we are meeting right away on this kind of a platform, a GoToMeeting or any other platform or virtual platform, and I'll solve your problem. The classes for financial modeling I'll be taking online, because that is where you require most of the time of more knowledge into it. So we'll be doing it parallelly. Plus, if there is anything, every session will have a half an hour to recollect whatever we have done in the entire week. And if you have a problem, or say for example, if you finish up your FATP online, then also you want to brush up your skills, or you want to meet me up 101, you can always do that in the current running batch, and you will not be charged anything for this. You can just come over, sit with us, and if you are coming from outstation, we have hostels up here, but you need to tell us beforehand that you require a hostel, you do not require a hostel, and based on that we will work things for you, and you can come and have 101 classes for any particular thing that you think should be taken in person, or you're not understanding the entire thing. Alright, so this is how the entire FATP is scheduled. I talked about the entire thing along with this. At the end of the session, Ankita will give you a call, and then you can ask any specific question during the program that you had. Please jot it down. I'll come 101 to each one of you, and then I will solve it out. If you have any doubts regarding the placements, please go to the placement page. FATP enjoys 100% placement track, though at times it takes a little time, but then you are equipped with all the necessary skills to clear up your exams or interviews. So please don't get worried about getting placed or things. You have to give me your 1.5 months, and trust me on this that you will sail through. If you want to check on the placement track, you can go to the FATP rbmfinishingschool.com. There is a page in there, and you can work on the same. Now what I'll do is I'll take you to the financial model that we built up. This is how we build up a financial model. What you're seeing up here is the sheet, wherein the sheet linkage, this is the main data sheet, wherein the sheet link is there. So this contains a link of all the sheets that are there in the data, and this is the valuation summary. So if someone is logging in, looking at your model, you can see the date and see the summary of the valuation. So these are the prices that you will get. If you see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 prices that we have. We have calculated 11 prices based on the model. Now question is, how do we arrive on things like that? This is the price that we will look forward to. For this, the EIC comes into picture. This is basically known as price normalization. So we will have we will be working and making, this is something that you would be making. I'll be just helping you out in making this model, and one model I'll make along with you. Second, you will pick up your own industry. From the industry, you will pick up your own company and then make this entire model. So if you look at data income, this is sheet linkage. This is where I have picked up the data, and from this raw data I have built up income statement. So this is the build up income statement. And see, if you have a look here, this is how we have made the projections. These are the projected figures based on certain assumptions. And here if you see, you have, which is something which is known as projection variables. Say for example, tomorrow your boss comes into picture and says this is Bajaj Auto, for example, and says as per the SEMA data the growth in 2015, 16, 17, and this would be something like this. You can change up your parameters and your numbers, your valuation, everything will change accordingly. So this is highly dynamic in nature, and you have a control in each and every item. Coming to the balance sheet, this is how we have projected the entire balance sheet. We will project the entire balance sheet. So we will be first making this balance sheet, putting our own formulas and all those things, and then we'll make the projected figures. So we'll calculate the entire projected figures. At the end, the balance sheet should match. This is what the checksum is all about. Then we'll make the, in similar ways, we'll make the cash flow. We'll discuss the entire cash flow, and then we'll make the cash flow, all three cash flows, and at the end, we'll add them together to find the make the cash flow statement. This is how we make the industry income statement, which is exactly similar to the company. That is what I was talking about. In the industry dump, you can put as many companies as you want, and the entire income statement will reflect, company's income statement balance sheet will reflect the addition or deletion. Industry balance sheet in the same pattern and industry cash flow. Now why do we make this? Is because this gives you a more insight. Say when you are doing a relative valuation, and if you want to compare 10-15 companies, if you look at pharma, the peer group consists of around 74 companies, and you want to add all of them together, you want to see the effect of all companies together, then it would be very difficult if you are picking up one company by, company by company. It's always good to sum up the entire industry. That is what we have done, and then make a comparison with the entire industry. This is company versus industry sheet. Say company versus company, you want to see certain parameters. How is, say, total fixed assets with, let's say, say net sales. So this is how you can see the graph and make your own comparison and write. And these are things that you will be including in your report. That's how you write a report. So this is where you put your own things into it. This is company versus industry. Say if you want to see how much is the cost of goods sold, in what proportion the industry and company are taking their cost of goods sold. So my company should follow the industry pattern. That is how we normally look forward to. If it's doing better than the industry, my company is doing good. So if you look at Bajaj Auto, for the year 2011 till 2013, they were there with the industry, and then it is coming down. This is as a percentage of sales. So I'll tell you all of this, how to make these graphs, how to make these dynamic graphs. Say we'll talk about ratio. This is what I was talking about. We'll talk about all ratios. We'll start with the profitability one. We'll make the comparison. We'll make the comparison between industry and company, and you can always have make a graph out of this. So GPM is better than a company's GPM is better than the industry, and then you can write, say if you are giving a buy call on a stock, you should give reasons for it. Company has done better than the industry in last 5 years. Their PAT margins is better, their EBIT margins is better, they are better on the liquidity when compared to industry, and all those things. That is how you can work upon. So this would be something that we will be discussing while making the modeling. And this is all you would be making. You will not get a template. You will make your template your own. By working on your own, you will make your template. I'll just give you how to make. We'll make one together, and second you have to pick up the data from the market, build up your own income statement, balance sheet and cash flow, and all those things. So this is profitability, liquidity, leverage. We'll talk about growth ratios, DuPont analysis, 5-factor and 3-factor on a return on equity. And this is my assumption sheet. This is one of the most important sheet. For example, if you want to work on this, tomorrow you come to know that the excise duty, government has changed the excise duty for these companies. Let's say excise duty has become, before that, let's see income statement. If you see excise duty is 0 for 2015. In your assumption sheet, if the excise duty tomorrow changes to 10%, say government levies a 10% excise duty, see in your income statement, you will see the values coming in here. That is how, and your valuation and everything will change accordingly. So that is how you have control in each and every item of income statement, balance sheet and cash flow. Then we will calculate the beta. This is a daily regressed beta. We will be using a covariance method, as well as I'll tell you about how to do on the slope. You can also utilize a regression analysis to it, but the value will come as the same, so you can do any one of this. Then coming to EIC, this is Economy Industry Company. This is EIC in Excel, which is known as regression. This is the data we have picked from IMF, and what we'll do here is, excuse me, sorry, we'll have GDP data, we'll have inflation data, and then based on this we'll try and find out the company numbers. If the GDP is, say, this in certain year, what will be my industry numbers? So this is known as regression values. I'll tell you how to do a regression in Excel, and that is how we'll be working on this entire thing. So this is an output window that you see up here, and I'll talk about how to utilize this output window. And coming into the valuation, we will see different valuation methods. We'll start with dividend discount model. We'll project our dividends, do some calculation, use a Gordon growth model, and to find out the price as of today. So this method is giving a price of 2329, and this is a relative valuation. This all we have calculated in our assumption sheet. The entire ratios are calculated in the assumption sheet, and this has been updated as of our Friday closing. 2674 is price we are getting by EV by EBITDA. So in the front sheet, I'll take you all these ratios in the first sheet, in the model assumption sheet. So that there is where I'll tell you how we will move forward for working on the price. And these are the prices that you will all be calculating. I'll be explaining you in detail how to find out the price based on a certain model, and then based on that model, not only price but how do we interpret that that particular ratio. We'll talk about the entire thing. Then we'll talk about the free cash flow to equity, the free cash flow based valuation, FCFE, FCFF in theory and then in practical. So these are the prices. What you see in green is the prices that we have calculated. Then this is economic value added or a EVA or residual method. We'll talk about this method as well. Here we'll have the competition, and in the end we have put in the data thing. So let's go to the home page. See, in the home page, now I'll just give you an overview of how do we arrive at the price. These are there's the different target prices that I've got. Stock is currently trading is 2673.45. So immediate resistance for the stock will come is from 52-week high. If you look at the pattern of the graph, this chart has made a 52-week high on Friday only. It has come, touched the 52-week high but could not sustain there. It came down to and closed at 2673. So we'll wait till the time that this crosses the first resistance, and then when the stock crosses the first resistance, we'll be looking at the price of 3004 rupees and 14 in coming few times, say 5 months or 6 months time. So this is how the timing and how do we get the price we'll talk about in the model in detail. So this will become the first resistance and this will become the second resistance, and support will come at 23.58. So in the valuation also, in fundamental valuation also, you can give your support and resistance, but the only difference is the time periods are little long. But there are times when you will find your relative valuation can be updated daily. There's a competition page in here where once you update the competition, the entire valuation prices will be working. If you see that 2673.45, 2674.55, a very, very, very close target. So it is currently trading at EV by EBITDA. So into multiples and all those things we will be discussing in the entire model. And this is please be assured that this is a model that you will be building. I will not give you a template on this model. Let's come down to the reports. I'll show you a report made by one of the students, Bipin. So he was tracking Indian oil and gas industry. So this is a report he made in January. These are the contents. So this is how you will make the entire report. So I'm just giving you a parameter. I'll give you a parameter on how reports are built up, and then you will build reports on your own. We'll be checking the reports, helping you out and working on these reports. So this is the report in the industry. Then I'll show you one valuation report. He is targeting ONGC. So this is ONGC valuation report. This looks little, the headings are not there because when you work in a company, you will have to put the company headings in company colors. So he has submitted in 28 January 2013. The target price was 324 using the EV by EBITDA method, holding period of a year. So this talks about industry overview and talks about the sources, why he is looking forward for this. Then these are the graphs that we were making there. You can put those graphs here, and at the end put something relevant. See, debt to equity ratio, asset equity ratio. So you can put all those ratios from there into your report, which will tell people why should they invest into a company, or why should you listen to the advice that you are giving. So this is how the entire FATP and financial modeling is placed. Besides this, we also run program for CFA L1. The classes would be L1 and 2. L1 classes would be starting from January. If you are interested in any of this, Ankita can help you out in taking online as well as offline classes. Now, before we end up, let me just take you to our website. Please go to RVM Finishing School. www.rvmfinishingschool.com. See, this is a website, and if you go to the placement page, click on the placement page, you'll get a list of the student with their designations, and this is the entire list of students. You can just have a look on this. If you want to speak to any one of them, I'll give their mail IDs and you can have a word with them. Few numbers would have changed, so you'll not be able to call them directly. So what we'll do is we'll provide you all the backups if required and the email IDs. Or what you can do is these guys are all there on our Facebook page. So if you are looking for updates at your end, so you can always go, that's a commercial page. So when you click on this Facebook, rvm.fat, you just have to like, you will get an entire update by yourself on your Facebook page. So that is how you can keep updating yourself on this. Just click on the like thing and you will start getting the updates on the demos or videos that we are uploading. You can also check us if you're looking for any of the training sessions. You can go to youtube.com and then you will type RVM Finishing School. You can find the entire list of videos that we have. If you want to contact us, you can put it here or you can just put it on the contact tab. We are based out of Hyderabad, and the contact form is there along with the address and the entire number and things. So you can give us a call or just put us a query. We'll get back to you with your specific things. Right, hope this helps you out in understanding the programs that we run up here, and the entire details are there. So what I'll do is I'll end as of now. I'll end the session, and if you have any doubt, please feel free to give us a call, or Ankita will give you a call. If you have, you can just ask us right now. I'll send you the link of this presentation or your mail IDs. You can go to it once again and see if you have anything. Please do feel free to call us up. Once again, thank you all for joining us. Enjoy your Sunday. Take care. Bye-bye.